want to look at this company that people have been asking about. Someone just requested it, and I want to look at it. And Mo, you'll probably have some thoughts on this. The company is Chewy, Paul.
Chewy. We've done Chewy before, haven't we?
The ticker symbol is CHWY. Chewy is the company. It's an American online retailer.
So remember, we don't have 5 years of data on Chewy.
That's okay. I want to get your take on it.
Okay, so what we're going to do here is when you're on this and you do the 8 pillars, it's not going to give you the data because we're looking for 5 years of data. Part of my issue is I want to look at long-term companies. So buying ones that have only been public for a few years, I want you to do the mental math and do the math yourself to do the research. I want to focus the 8 pillars on 5 years of data and more.
What I'd like you to show is maybe why someone like yourself may or may not be buying Chewy regardless of his age.
I gotcha.
Go ahead. So this company, Paul, let's start. The 8-pillar analysis of Chewy. What is the market cap for Chewy?
$34 billion.
Is there a dividend for this company?
There's no dividend. They actually lost $175 million in the last 1 year. So there's no PE and a negative profit margin, 2 X's to start, right? Because they're new, they just went public, they're trying to grow, they're probably spending a lot of money on marketing. FYI, I love Chewy, I use Chewy, I buy off of Chewy.
But is the stock something you're buying?
That's the question.
So we don't have revenue growth. Show us the revenue.
We have revenue growth. It's just not going back 5 years. They did $2.35 billion in 2018. They did $5.6 billion last year.
That seems good.
That is good.
Profit growth on that same time period.
They went from losing $200 million to $175 million. So that's a check mark because it lost less money.
They lost less money. How about shares outstanding for this young company?
X, 396 to 409 million. So that's an X there. So again, guys, new company. They're trying to establish market share. They're obviously competing with Amazon and Walmart and the other companies, but they're really trying to win people over with customer service. I've heard that thousands of times from people who have used the service. They're all about the customer service.
Pillar number 6 is current assets over current liabilities. Can they pay their bills, Paul? 1.14
billion versus 1.32 billion. That's an X. They don't have enough cash on hand to pay their current debts. So that's not good.
We've been getting comments, Paul, in a couple of our videos that your stock picking and what you need to buy into a stock is too strict. And people are saying, are there any stocks to buy? And I said, well, couple this with if there's a huge collapse, what will some of these undervalued stocks do? So a company that's already overhead in when they're underwater already in this great time, what can happen to a company like this if obviously there's a huge correction?
So one of the great things you can do, especially with our software, go find the companies that make the most sense that are just overpriced. Find the ones that have the best balance sheets, the best future. Value them and say, okay, add a list of 100 stocks maybe, it doesn't matter, and pick a price for each one and set an alert. Alerts will be available on here at some point in the future. That way, when it hits the price, you can start buying it. Remember, just because things are overpriced doesn't mean you don't have work to do. Am I being a little more cautious? Depends who you ask. Our investment friend Gary is way more cautious than I am. Like, he sits there and thinks that some of my buys are like, oh, I wouldn't do that because of this and that. I'm like, well, I like it. You know what I mean? So it all depends on the kind of investor you are. But from a financial perspective, it's money in, money out. At the end of the day, what matters is what assumptions are you making on your analysis. And that's it. I'm not always going to be right. I'm not always going to be wrong. But you have to pick the style that works for you. And if my style is part of it, you might modify it. Because my style is the same as Gary's, but we just have he has stricter requirements than I do, but he's also going for much smaller stocks so you can find those deals in.
Kevin's asking a great question. Can Paul show where in the 8-pillar website if Chewy is overpriced? How are you, we determine our overpriced or underpriced?
Okay, so let me pull up Microsoft.
From market cap. Okay, go ahead.
Microsoft's a great example, and here's why. Look at the 8 pillars here. Great profit margin, great revenue growth, great net income, decreasing shares, they can pay off their debts, cash flow growth is there. The 2 value metrics are price to earnings and price to free cash flow. That's how I know it's overpriced. Those 2 metrics alone tell me this is a great company that I just want to pay a lot lower price for. How much? That's for you to decide. It's all about when we create the stock analyzer tool, which will be coming out in the next 4 or 5 months. You'll be able to input a company, make your assumptions, and it'll tell you, here's what you should pay for the company today.
That's what people are asking, so I'm glad you brought that up. A social dancer, our gal from Toronto, saying, will the software show suggested or target buy prices? And you just said that's the answer.
It'll do it based on what your assumptions are, of course. Always be based on your assumptions. What's up, Mo?
It's sold out.
It's sold out, guys.
I'm making a new one.
Tim says he's making a new.
What price are you putting on it, Mo?
63.
$700 million. Okay, we're going back to Chewy, Paul. Let's get back to Chewy. We just did current assets over current liabilities, which is pillar number 6. And now we're going toward what is usually the most important metric, which is free cash flow growth, baby.
So there is no average free cash flow. It's not 5 years. They went from a negative 128 in free cash flow to a positive 19. So it's increasing. But remember, the company is 36 billion. Let me do all these zeros here.
34.
Whatever.
Okay.
34 billion. And the free cash flow last year was 19 million. Okay, can somebody do the math for me?
Probably not me, but
so
go ahead.
take those off, take those out. Whatever. What's 34,000? It's 170? No.
34,000
1,700.
divided by what?
1,700, call it.
Okay.
34 billion divided by 19 million.
Yeah, 1789.
Okay, so 1,800.
What is that? What is that number again? What does it mean?
This is the price to free cash flow. That means for every dollar of free cash flow, you have to pay $1,800 to get it.
Come on.
Yes, which means, by the way, that's on last year's numbers. The question you have to ask yourself is this going to go up? Probably. But let me ask you this question. Where does that have to go for you to be willing to pay $34 billion for it? That's the question you ask yourself. Every company has growth potential. Everybody in the world thinks a company has growth potential. The question is, are you paying a cheap enough amount where you can get enough return on that growth potential and still accommodate things going wrong? Because guess what, guys? Things always go wrong. Amazon didn't hit their price targets, didn't hit their goals for a decade, like literally a decade after they actually had the goal. And Amazon's one of the best companies in the world.
The stock price for Chewy on February 12th was $118. It's currently $85. Are you getting anywhere near this?
Listen, I'm not touching this, and here's why. I love Chewy. I want to wait for things to settle down. What's going to happen with the company? How are they going to fight Amazon? I mean, I look at these things thinking, I'd rather just wait for Chewy to get more established and go, okay, now we're stable and now the excitement has passed. I like to stay away from the excitement. Whenever people are flocking to an area, I go, let me stay over here. Because if they're flocking to an area, it usually means something's being overhyped. Because remember, stocks are merely supply and demand. The more demand for a stock, when demand goes up, price goes up. So I'm going to sit there and say, wait, let me wait for demand to go down. And then stock price will go down. Because I'm trying to buy cash flow. I'm not trying to buy baseball cards. I'm trying to buy cash flow. So my goal is to pay as little as possible for every dollar of cash flow. That's it.
Mo, what are your thoughts on trading Chewy? They initially asked you what your thoughts, but this has been brought up multiple times. I'd love to get Paul's thoughts, but go ahead, Mo. Go ahead, baby.
I like this a lot right now, and I'm going to say what everybody wants me to say. I would be putting a tracker share on this if you want to, but I am going to be putting this on my watch list of 5 stocks right now. And what I really like about this is this is a year out. So they just kind of went sideways for a while, but look how, when they went through this sweet spot area back in October, and then they just kept climbing and climbing, going sideways here and just kept climbing, and basically doubled their price. They went from basically $60 to $120 a share. Now they're kind of down here, just building up that energy, consolidating, going sideways. All of a sudden, this red line is going to come up through into the sweet spot, and we're going to be able to ride this thing up to $120 a share. So I'm hoping that we can get into this maybe $96 a share, $97 a share, and make that ride to 120. So Bid and Ask Nation, put this on. I know we talked about stocks that we need to find to trade now. This is one of them.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.